More to consider about cost than just the down payment when you're saving to buy a home. From closing costs to property taxes to home maintenance, first time buyers should plan to budget for a variety of home expenses. So today we're breaking down common expenses associated with home buying that every buyer should understand and what to expect in terms of budgeting.
Yeah, Nora. All right, first up, guys, the home inspection. Hiring a professional to ensure that the home is structurally and mechanically sound, that's a necessary step in the home buying process. Now, if the inspection report comes back with major problems, you might be able to negotiate the repair terms with the seller before you close the deal. Now, depending on your location, buyers should expect to pay anywhere between $200 and $600 for a home inspection, which, by the way, is upfront, out of pocket, and it's a non-refundable if the deal falls through. Home inspections aren't mandatory, but it's a big step that every buyer should consider taking.
Next up, the appraisal fee. You'll need to hire a home appraiser before finalizing a mortgage loan agreement. The lender will hire an independent certified appraiser to assess the property value of a home for sale. This process includes evaluating the home's features, as well as researching the prices of comparable homes recently sold in the area. Appraisal fees can vary depending on which state you reside in, but they typically run between $250 to $600.
All right, next up, Nora, an escrow account. This is an account that pulls money from your monthly mortgage payment into an account for the sole purpose of paying your property taxes and your home insurance. Now, some lenders require that an escrow account be set up in conjunction with a mortgage loan agreement and that an initial deposit be made into the account at the closing table. Now, in addition to the mortgage payment, the homeowner will also pay extra to the lender each month, and that's typically 1/12 of the estimated annual bill for taxes and insurance. The good news is that making monthly payments in an escrow account, that'll ensure that you have the money to pay your property taxes and your homeowner's insurance when the bill arrives.
Next, closing costs. Saving for a down payment is only the first step in the buying process. Among many other expenses, you'll need to have enough cash set aside to close the deal on your home. Experts say you should account for 2 to 5% of the home purchase price to cover these costs, which include loan origination fees, attorney fees, and even homeowners association fees and taxes. You may even be able to roll your closing costs into your mortgage, so there are no upfront costs.
And last, Nora, home maintenance and repair costs. Once you've moved into your new home, you should consider additional expenses for general maintenance or repairs. Maintenance and repair expenses usually include lawn care, plumbing, electrical, roof repairs, and appliance replacements. Experts estimate that homeowners should set aside at least 1% of your home's value every year for these expenses and to adjust if your home is on the older side.
Your future home is out there with Rocket Mortgage.